Good afternoon, everyone, and welcome to Vantage Markets, the Monday Open, presented and hosted by the Vantage Private Client Group. That'll be me, Jeff, in Sydney, and Mark in Melbourne. This is the first in a series that we're going to be running every Monday. Hopefully, wrapping up what happened in the markets last week, talking a little bit about what's going to go on in the markets this week. Every week, we'll try very hard to find a focus. We'll do a little bit of technicals for you guys as well, and hopefully answer some questions as we go along as well. So last week was a pretty big week for markets. We had the US FOMC cut American interest rates 50 basis points to 5%. That was the first time they've adjusted rates on a pivot in interest rate bias by 50 basis points since the global financial crisis. So it was quite a big deal. It initially saw the US dollar firm, then fall back to end the week fairly flat. US equities continue to go higher. Obviously, lower borrowing rates are good for listed and unlisted companies over there in America. And the US interest rate curve maintained its inverted stance, but flattened out a little bit. We also had much stronger than expected Australian unemployment numbers, which will lead into one of our events for this week, which is an RBA rate decision. And the UK Monetary Policy Committee and the Japanese Bank of Japan both left their interest rates unchanged. So just as an interesting tidbit, the US has now started an easing cycle. The UK looks like it's still deciding what it's going to do in terms of next direction on rates. And the Japanese have their most recent move was a raise in rates. So it looks like they're going to start their rising cycle, but they're not in any hurry to do that. So this week we have another nice full data calendar. We've got all of the PMI numbers coming out of Europe and the US over Monday. On Tuesday, again, we've got that RBA interest rate decision. Most market players are not expecting any sort of move there out of the RBA this week. I think the bias before the Fed moved was for slightly higher rates in Australia, but it looks like that might be the end of it. Obviously, with interest rate differentials being very, very important in currency trading, the Australian Reserve Bank doesn't want to be raising rates while the US is cutting rates, or the Australian dollar will go through the roof. We also have Australian CPI on Wednesday. I'm pretty sure the RBA would rather see that before they make their decision, but they're seeing it after. On Thursday, we've got the Swiss National Bank making a monetary policy decision. They're expecting to cut rates by 25 basis points. And on Thursday as well, we've got US GDP, which should contract slightly but still remain positive, which is the most important thing, and initial claims, which should be largely unchanged from the week before. So again, the focus for this week is on the PMI numbers that come out in Europe and the US in the early part of this week. Those numbers are really quite important. They're a little bit forward-looking. They're probably the only data set that we get that's official that is forward-looking. The RBA will announce interest rates for Australia on Tuesday, and the Swiss National Bank to announce on rates later on in the week. So we always get the rate decisions from the central banks all kind of bunched up. They all like to make decisions together, which is fine as long as they don't start doing coordinated out of sequence rate moves. So on the technicals, today we've done the euro yen. We've shied away from the dollar and looked at the major cross. Euro yen takes the US dollar move out, and we'll just look at what the European currency is doing against the Japanese currency. You can see from a Dow theory perspective, it's forming not really a symmetrical triangle, but kind of a wedge pattern. The prior low, this is a daily chart, by the way, that prior low is higher than the low before, and the two most recent highs are lower than their previous highs as well. And it's broken upwards from that long-term downtrend line. And what it's done that I really quite like is that it's broken above that trend line, closed above it, and then come back and tested it on the upside to see if it's support and bounced straight back off. Generally speaking, that's a pretty good sign. And for those who are technically minded, I think targeting the prior highs on the upside would probably be a bit of a good idea. So we did have a couple of questions come in this week as well. These were questions that I got from some of my clients during the week. The first one was, can you explain what the PMI numbers mean and how they might affect this week's trading? The PMI stands for Purchasing Managers Index, and it's a survey of people who make purchasing decisions in companies. So these are decisions that they're going to be making over the next 3 and 6 months. They index those numbers, and if those businesses are looking to make more purchasing decisions that are going to affect their particular outputs, that's a good thing for the economy, obviously. And then conversely, if they're making less purchasing decisions, that indicates a contraction. So the way that generally works is that anything above the 50 number is seen as expansionary, and anything below 50 is seen as contractually. So those, as I said earlier, it's probably the only forward-looking economic indicator that we have because it's a survey. The Japanese Purchasing Manager Index is their Tankan report, which comes out 4 times a year. That historically can be a very big mover on the Japanese economy. And in the old days, it used to sometimes predate 300-point moves on the dollar yen. Question 2 we got was, with a bullish technical formation playing out on the Aussie, higher lows and a retest of that 0.618 resistance, do you see the fundamental outlook supporting this move? So those who have spoken to me will know that I like to combine fundamentals and technicals with my trading. I like to use fundamentals for direction and technicals for entries. I think from a technical perspective, with the US having just cut rates and with Australia looking to hold their interest rates, that interest rate differential will move into our favour. Currently, rates in both countries are at 5%. But if the RBA was to do nothing tomorrow, which is what a lot of the market is expecting, we should probably see some firmness on the Aussie dollar US. That first major resistance on that is at about 70. And then we would be looking to target the prior highs all the way back up. I think I saw something from the National Australia Bank on their website today that they are targeting higher Aussie dollar US dollar rates into year end and into the first quarter of next year. So that's not us, that's the NAB. Obviously a big bank in Australia and a big player in the Aussie dollar market. So just on us as well, this is just a portion of the content that we have. It's certainly not all of it. We are this is just a portion of the content, including what we're doing here today, which will happen every Monday. We have our VIP trading room, which is staffed by some analysts out of Singapore. That's the Everest Fortune Group. They work very closely in the hedge fund space over there in Southeast Asia. They can answer questions, and they provide a little bit of analysis for us as well. That trading room is also staffed by Mark and myself, who are logged into that all day long. So if you did want to ask us a quick question and didn't really want to pick up the phone, or you're not in a position to be able to do that, feel free to shoot us a note there. We're very responsive and answer those questions very quickly. Every Monday, we also have our weekly technical video, which will go through between 3 and 5, I guess, depending on the market, different technical setups that are occurring in our most traded assets on our platform. We also have the private client daily update, which is written again by the private client group. That's Mark and myself. That goes out every morning. That wraps up the trading from the night before and gives a little bit of forward looking on what to focus on for markets in the upcoming day. So that's it for now. Thank you very much for your time, and we'll see you next Monday.